Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Don, we're off to quite a strong monthly open. We're back above 60k. The range low, which you hated so much, we're basically back retesting it. So it's a pretty spicy day/week, I think, on the BTC front.
It is, yeah. It looks much better today than it did yesterday, huh? Like it's funny how quickly the sentiment shifts. Because when we were breaking down, like everyone went from being super bullish to super bearish. At least on Twitter, on even of the people that I follow, which I consider to be like decent traders. And now we're back at resistance, and I think the sentiment is quite different again. But yeah, if we close back above there, it starts looking really good, really fast. Like we talked about yesterday briefly on the altcoin first day, I think is the day show. So yeah, I'm excited for that.
We also discussed the sort of push and pull between high time frame buying chads versus the low time frame range breakdown sellers. Do you think that's still basically the dynamic we're faced with? Because if we look at the high time frames, like the monthly and the weekly, if you have a monthly close above 58k, that just looks like a bullish retest, realistically, of a sort of breakout, pullback to the most obvious level on the chart, the least near current prices, and then that looks good. We discussed before on the show, right? You're only going to get monthly bearish signals and a monthly close below 58k. And that's what the market is fighting at the moment. Last month didn't even test it, at least not on the Coinbase monthly chart. And just in general, it was more of a spike of previous month's low than a deep test of the level. This looks like the retest month on the monthly. Would you agree with that?
Yeah, I agree.
Okay.
It's kind of funny because like sentiment, like I talked about earlier, like shifted quite aggressively in the last month. But technically speaking, this is just when you look at the monthly, there's not even this is not even a pullback. Doesn't qualify as anything really. Like this is one red candle in a sea of green that took us all the way above all-time high, right?
Yeah, that's true.
Which is quite aggressive and doesn't really warrant the aggressive bearishness we've been seeing, I think. But I was one of the bear tarts, but that was more lower time frame based rather than higher time frame. And for me, it was always like when you look at the monthly and the weekly, it's always this looks like it wants to go higher. It's just a question of whether it wants to go higher from 60k, where we are or where we were a couple days ago, or if it wants to go from 45. And right now, this is like a nice move, even with the monthly candle looking like it does right now. It's not a bad looking chart on the monthly. And on the weekly, it's the same story, right? Where we are kind of trading around weekly support, which is 60k. We got rejected by the prior all-time high of 69k. Went all the way back down to the all-time high close before that, which is 60k, and we're kind of ranging in between those. And if this week closes above 60k, which I think, like, given how it looks right now, very well could. Both of those time frames, the monthly and the weekly, just look good. And then
so the only divergence would be from the daily time frame, right?
exactly, and the daily time frame realistically only has like 1 to 2k to go, right? It is a bearish retest right now, so technically that chart is still bearish, and it has bearish market structure in like opposition to what the weekly and the monthly have, because those are hilariously bullish. The daily is clearly trending down right there. You can draw highs, like lower highs and lower lows, quite nicely on that one, and it is at range low resistance. That said, it's kind of like and there's something that I say for breakouts both ways always. And people are always like, "Oh, Don, you're just a bear tart." When I say like, "Hey, this breakout kind of sucks because it immediately retests," but this works for breakdowns as well, right? Like I just don't like breakouts and breakdowns that immediately come back to the level, because if there's any urgency there, and if it's actually like just a strong breakout, it really should just move away, and it should move away with urgency. And so far, at least on the daily time frame, hasn't really happened. And given that the monthly and the weekly time frame are bullish, I wouldn't necessarily want to be shorting this bearish retest, even though it is technically a bearish retest, because the time frame's just not aligning. If anything, you would want to kind of see the daily also switch back bullish, which would happen above 62, 63K. And then you have all three timeframes aligned, and you still have like at 63K, you still have a nice kind of pullback from 70K, 74 or whatever the high was. That's still like what? Let me check. That's still 14-15% lower than the all-time high. And then you would have all time frames in agreement, and there's a trade there, I think, to the upside.
So it's essentially the time frame alignment waiting room if you're conservative, and if you're really aggressive, you'll get that signal on the daily. If you're more risk averse or patient or slower moving, presumably weekly and or monthly. Although monthly might be quite a while.
Would take too long.
Yeah, monthly would take too long. Yeah.
But I think basically like buying right now, and we talked about this in the last few days, right? Like I talked about it on Wednesday, and we talked about it together yesterday. How like people always tend to get too bearish when something breaks down, and then like want to buy into resistance. Like I really wouldn't want to buy right now. Like I wouldn't want to buy into 61K, because then you're kind of stuck. As like if it rejects there, you're gonna be like, oh, I'm such a fucking idiot, because obviously that's resistance. And the setup is not really that much better. Like the payoff is what I'm saying. Like the payoff, whether you buy 61 or 62K or 63, I don't think makes much of a difference in the grander scheme of things. And it is technically a bearish retest, so you don't want to rush into something like that. So yeah, I think it's just a waiting room, like you said. You wait till the daily flips, and then you have a relatively good setup to the upside. And if that fails, we're fucked. But then, like I think that will be a really good signal in itself. Like if we reclaim 63K and then it fizzles out, I think the market is done for quite a while. Like I think that would then make the market at least like at best range for like 6 months or something.
Here we go. The 10-year S&P sideways Don is back.
Yes.
Back.
Oh yeah, I mean the S&P, like it went down a little and it went sideways. Nah, I'm just kidding.
For the same time frame, of course. Yeah.
Yeah.
I think one way to conceptualize what you're discussing there, kind of like what's the difference realistically between 60 and then doing business above 62.5 or whatever. One way I like to think about it is how much risk reward am I sacrificing for a significant improvement in probability, right? And in the case of waiting for the daily reclaim, I think the probability of the setup working out is materially higher, because then you have a daily failed breakdown from monthly support, not a daily bearish retest ongoing. But in terms of how much risk reward you're sacrificing for those improved odds and that improved confidence, it's really not that much, right? Like even from current prices, if you were to enter, I mean, even quite conservatively, once we get back above the breakdown candle, so above like 64, 65K, that's only like 6% away realistically, right?
Yeah.
And then if you're targeting at least the range high, if not this range breaking to the upside and high time frame continuation, that's 16% away at a minimum to the range high. I mean, maybe a bit less depending on where you draw it, 14, 16%, whatever. And then you could justify holding that into all-time high continuation. I think that's a pretty good deal, It's good to find these spots where you can justify waiting for a bit more evidence in your favor, or for an actual setup to form, so that you're not buying resistance or selling support, as long as it doesn't harm the risk reward of the trade too much. And I think this is one of those nice points where it's a bit worth waiting for, because you don't give that much up, and then if you ignore it and you're wrong, you essentially feel like a massive mug buying the bearish retest and having to babysit that, right? Or buying the potential bearish retest or whatever. So I still think the ideas are sound. Sort of, if you're going to be really aggressive with it, then above 62, 63K, or even reclaiming the breakdown up at 64-ish, would bring all the timeframes into alignment, where you have monthly, granted aggressive, but still support, right? Weekly, again, aggressive, but still support. And then the daily potentially causing like a snowball effect, and you have timeframe alignment. That's a good bet. Whereas if you're betting on, the time frame divergence essentially resolving bullishly without waiting for the daily time frame. That's higher risk, but I would argue only marginally better entry. And so I think the better trades are those that give you higher probability without sacrificing risk reward too much. And the shitty trades are those that don't really improve your probability that much, and the risk reward ends up eating shit. And so I think this is one of those boring examples. I know I'm rambling on about it, where sometimes you just get these spots in the market where it almost rewards you to be patient, as opposed to, oh, I want to be aggressive and like catch the wick portion. Because like the wick portion, I mean, a lot of it is kind of played out already, at the lows. And at this exact juncture, I personally think it's worth waiting for. Does that make any sense?
It does,
Do you remember when we talked to Avi on Casual Friday like 3 years ago? I think he was making a similar point. Like, you want to find those points in the market where you get a big boost in probability for only a minor trade-off in risk reward, and those tend to be really good. So yeah, daily so-called bearish retest. If it plays out, amazing, we called it. If it fails, then we called it as well, right? So the trend continues, Don.
I mean, that's just how it goes with the show.
You just know, by the way, there's one systematic trader who's been watching this range the entire time and was like, oh, finally, the close from 2 days ago, that last red candle is a decisive break of the range that isn't SFP. I'm going to sell the daily close and just like underwater the entire time. And now I'm not feeling too good. But sometimes that's the cost you pay for systematic entries versus more discretionary type of stuff. And I think that's the devil you essentially battle with, or the poison you pick when you trade breakout/breakdown trades in one way or another, where you either just like take the breakdown trade when the breakdown happens and you concede that if it comes back to bearish retest or bullish retest, your entry is going to be shit, but at least you have an entry. And on the other side of that, if you're a retest type of trader, then you concede that you're waiting for the better risk reward opportunity, but it's completely possible that you don't get an entry at all. And there's kind of no free lunch, or you can scale in and start doing all that type of shit, but I don't personally like those approaches because it's the worst of both worlds. It feels like if you do a bit here and a bit there. I've never been a huge fan of that.
Yeah, I think generally the retest traders, I don't like it personally. Like, that's just not. I think, for example, right now we're bearishly retesting, right? And that would be the optimal entry for short, for like if you follow that system. Like, oh yeah, it's a very clean range. It's retesting, but really it shouldn't be retesting. Like, you already put yourself in a shitty position because the market is stronger than it should be by retesting in the first place. Just why the whole confirmation thing I find a little bit of meme-ish of sorts. Like, it depends on the strength of the signal, basically. Like, a lot of people are like, oh, like they can see clearly bearish price action, as like we had with the range, right? Like, we discussed this at length, where like we made lower highs, we kept on hitting that support. Like, that's to me clearly bearish price action, right? But then you're like, oh, I'm not gonna sell. I'm gonna wait until it gives me like a bearish retest from the other side or something, and then I think you kind of missed out on most of the trade and actually the easier part. Because like, if I had to make a bet here where I either short or long, I would be very, very stressed. Like, I actually don't know which side I would prefer, whether I would want to short or long. Short at resistance sounds quite good, but then you have high time frames disagreeing, and you have the immediate retest, which to me is kind of weak of a trend forming kind of move. And then on the long side, you obviously don't want to long into resistance, so that's also not that great. That's why I just dislike it. It's the whole breakout trading, the whole like confirmation. Like, I like when I see weakness to just take the trade and not necessarily wait too long just to be 100% sure. Because the moment everything is 100% sure, the trend or like that move is more likely than not already over, right? Because there's no certainties. And if you're like, if you kind of just really want that certainty, trading just isn't for you, because you have to always take a little bit of a gamble at the end of the day. It's just trying to get the probabilities right. But like, on the other side, I do actually like the confirmation trade on a range reclaim. And the reason for that is basically what you said earlier, that it doesn't cost you that much. Usually for confirmation, it costs you a lot, right? Like the Bitcoin was making lower highs at 71K, and then you got the bearish confirmation at 60K, right? So that cost you a whole 15%, if not more. On the reclaim side of things, it costs you much less.
That's a really good way of thinking about it. Yeah, 100%.
So
Great
because
example.
your target is quite a bit higher, right? But it always depends also on whether you're long-term bearish or bullish. Because if you're like, okay, this market is going to 12K, then you can take these trades much more comfortably, right? You're like, okay, I can short 61K.
It's like all of this is a gift, right? Like it doesn't matter.
because then it's a gift for you, right? And I legit think that has a lot of impact on your trading, right? Like where your underlying, like where you think the market is just generally going. And
sure.
it should. Otherwise, like you're in the wrong market, right? Like if you have absolutely no idea where the market is gonna, or like no
directional
interest
bias
or directional bias, yeah, I think you're trading the wrong market most of the time. Like you should be. It's much easier to have like banger trades if you trade a market that you like, for example. It's just how it is.
And it makes a massive difference as well, right, in terms of where your target is, as you mentioned. Because let's say your target, just take an absurd example, is 12K. Then as you mentioned, it really doesn't fucking matter exactly where your short entry is, if it's in the 60s or in the 70s. But let's say the same trader has 55K as an omega important support level, then contextually that changes kind of how long you want to hold that short trade and how you manage it and when you're looking to flip and so on and so forth, even if the levels and the price action, etc., are the same. So that makes a massive difference. And I also just don't like two trends in kind of Twitter trading at the moment. One of them is the idea that you never predict anything. You have to be reactive at every single level. I think that's just kind of almost fundamentally wrong. Some amount of what you do in kind of discretionary TA-based directional trading is prediction, and then you try to kind of wrap risk management around it. But there has to be some sort of underlying view of what the market is more likely to do, or at least on what you're sort of more likely to bet, preferentially. So the idea that you're some agnostic monk mode, anything can happen to anyone at any time, and all these opportunities and directions and probabilities and levels are equal always, I don't think that's... I think that just leads you to so many possible permutations of the market that you can't effectively execute a trading strategy if you need to keep like 12 different outcomes in your mind at all times at 15 different levels. I think that creates a real practical burden to trade execution and management. The other trend I don't like is people falling down the confirmation rabbit hole. And maybe you've seen this as well, but it's essentially, let's say you have a weekly level, and then you're like, okay, this is a weekly level, and the market hits it, support resistance doesn't matter. Then you're like, okay, I'm going to go down to the daily and try to get a daily close. Okay, now I'm going to go down to the 4 hour and look for a 4 hour market structure shift. Okay, now I'm going to go to the hourly and look for like an hourly fair value gap, and now down to the 5 minute SFP. Going to go to the footprint and look for a delta imbalance, and you just keep going. And at that point, the original trade idea is like completely detached from reality, or a sort of skeleton of its former self. And I think, again, purely from just like a practical trade execution point of view, if you make trading that complex, that sort of multivariate and that difficult, there's no way you'll be able to practically execute any type of system, And I think I think both of those come from a discomfort with any degree of uncertainty, right? Like I need confirmation on all time frames. I need all the time frames to align. I need to be able to convince myself that I can make money irrespective of what happens to the market. Even if I'm wrong, I'll be able to flip, so the risk is fine because I won't lose. All these mentalities I think are ultimately harmful and just interfere with kind of trading full stop. And I'm speaking from experience here, especially the multi-time frame kind of rabbit hole. That used to be a big thing that would beat me up, essentially, where I'd get so lost in a daily, weekly idea, looking at like 5 minute breaks in market structure. You overanalyze, paralysis by analysis, etc., FUD yourself out of it, and then you come back to it a day or two or a week later on the original time frame that the trade idea was conceived on, and it worked out amazingly. And you can't help but feel like a cunt. Like, what the fuck was I doing? Looking at all this low time frame shit. If I kept it as simple as possible and followed the time frame on the time frame in which I thought of it, or follow the trade on the time frame on which it was, sort of came to mind, then I would have been just fine. But maybe we should keep up the philosophical rambling, Don, because it's helping the market. What do you think?
Yeah, I mean, just how it's all like put right now. And we talked about this yesterday. It's kind of like if the market goes up, it's a really nice trap, right? Because the low time frame idiots look at the daily time frame and they're like, fuck, like this is all over. And then the high time frame chats look at the other time frames and they're like, it's value dip, you know? And I do kind of like that kind of setup. So I wouldn't be surprised if we end up like I was very bearish the last few weeks. I'm very much zen right now. Don't really think the market has to go down anymore. It can, but it doesn't have to.
Well done. There's a. What do you think of the 1 minute adamantium support flip at the bottom of the cluster?
The 1 minute.
The 1 minute.
Oh shit. Oh, dude. If you have me looking at the 1 minute, I'm like, fucking let's go. Let's go.
That's all we need.
New all-time highs.
Yeah. So just to summarize the high time frame view, the monthly, as long as it's still above 58k, at least on a closing basis on this time frame, should be treated as a bullish retest until proven otherwise. If it closes below 59k this month, then that's a pretty strong bearish signal, I would argue, because the monthly time frame doesn't really fake out all too much, all in all. No. Especially with these kinds of failed breakouts, the monthly is like really good at that type of thing. I also don't know if you think there's any validity in comparing it to the 10.7k retest that we had in September 2020, as we discussed on Altcoin Thursday. That doesn't seem like a terrible example of a clear monthly retest getting lost in lower time frame sentiment flip-flops. At least that's how I remember it. So that's something to bear in mind, and at least some precedent to suggest that monthly breakout and retests aren't terrible, to be honest. On the weekly time frame, it keeps wicking, Don, which you should hate, but I know you don't. And I think the weekly level you have is up at 60k essentially, right? Kind of the highest close of the previous all-time high. Yeah. So that's that. I mean, that hasn't broken either. So if we're looking at the high time frame, just objectively with the available candle closes, monthly support with the available evidence is currently holding. Weekly support with the available evidence is currently holding. I think that much is fair. And the good thing is, this almost circles back to the risk-reward discussion. If these monthly and weekly floors essentially fail, then you're not paying that much more in a sort of entry or in an exit for a much higher probability trade, because there's like a lot of space until the next high time frame levels, right? So let's say you made a bet at around 58.60 that it's going to hold, and then you end up getting invalidated at that bet around, I don't know, 57, 56, maybe even break even, depends on your entry, trade management, etc. That's not the end of the world if that then introduces a decently high probability of the market going to, mid 40s to 50. Like that's a loss you can stomach, because it's in one of those areas that means something, at least in my view. And then the daily time frame is probably the most interesting one of all. Well, because you get faster moves, more candles, more data, and because it's the one that's diverging from the monthly and the weekly. This time frame actually did post a bearish close by breaking below the range. It is the black sheep of the bullish family, and we get some resolution to it quite quickly as well, because it is the daily time frame. So purely TA wise, bearish retest. If you're like low time frame trading this type of thing, then contextually this is a less attractive area to do business. But then there's a potential snowbally cascading effect that can take place above the point of breakdown, which is 62 to 63k, because then you have multi-time frame alignment, and you can feel less bad about betting on that as opposed to anything else, really.
Yeah, I mean, that's just a chat setup. I love those almost all the time. When I get them, where like the daily time frame is bearish but the weekly and the monthly are bullish, like when that flips, you usually get you make quite a bit of money. So I think that would be quite nice. Just needs a little bit more juice.
Do you think there's any chance, or how do you rate the probability of essentially the reclaim, meaning fuck all, that we close above 62k, for example, and then it's just more chop, wicks, shitty range, maybe retests it, and kind of non-dramatic price action in one form or another? Because I think the base case for these reclaim type of setups, multi-time frame alignment, etc., is that as soon as it triggers, it's like, that's it. The trap's been sprung, and fucking send it back to the range high at least, if not all-time high breakout continuation. How do you assess the odds of, let's say the daily setup prints, but then kind of no fireworks, essentially?
I think I think it's not that likely. But 2, I think it would actually be okay as long as it doesn't lose the range low again.
Okay.
So as long as it sticks around, like I generally, and it's something I said like a couple of weeks ago, the longer this goes sideways, the better for bulls, because we're basically digesting the move that we had. And I mean, that was a really, really aggressive move. Usually you have to digest those by just nuking the entire market, but you can also digest it by just going sideways for long enough. And a false breakdown into like sideways afterwards would be like the best case scenario, I think. So I generally think as long as you reclaim 62.5 or whatever it is, that area, and you don't lose 61K again, this just looks really, really good.
There you go. You heard it here first from the range low fudder himself.
Yes.
I think that's pretty comprehensive for BTC. Is there anything else that's on your radar, either price-wise or futures-wise? Or, I mean,
No.
we talked about sentiment at the beginning. I think the rest is reasonably self-explanatory.
Yeah, I think there's not really that much to say. Like, we are exactly at the point where the decision is made, and you can make both arguments. Like, this is the typical kind of spot where it's like, oh, bearish retest, or of course, like we have momentum into this resistance. Of course, it's gonna go up, right? Like,
that's gonna be the title. Don't worry.
So, like, both arguments you can make quite well. I think the bullish argument that we have a little bit of momentum is usually a shitty one for a bearish retest, but given we have the weekly and the monthly time frame on that side, it's actually not a bad one. So there you go.
How about this argument, Don, that this pump is pure correlated fraud based on S&P correlations, essentially? The market, legacy market going up. I think that we had some unemployment figures this morning.
Yeah.
And the S&P reacted accordingly. And so this retest is a gift for bears, because otherwise they could never hope to get such a good short entry. But these correlation algos gave them a gift in the form of an S&P exit pump, and it's the final exit pump, and Don fell for it. What do you think?
I mean, you could make that argument, but then you would have to make the inverse argument as well, that the dump only happened because of the S&P, and then you get into hot water really fast, I think. No, I mean, Bitcoin's up 4%. The S&P is up like what, 0.5.
Yeah, that's like 4% in Bitcoin terms.
It's actually true, but still, like I wouldn't necessarily make that argument. I think, like, obviously, like the problem is that it's somewhat true, because if the S&P like just nukes down again, there's a good chance that this would just lead to Bitcoin also showing weakness, right? But I have made the discovery that, for me at least, if I ignore the S&P and just act on what I know, and that is Bitcoin and crypto, I generally tend to have a clearer picture of where the market's gonna go. And for some reason, like I tend to be right on the S&P while looking at Bitcoin more so than if I just look at the S&P itself.
Bro, I remembered when you were calling the S&P perfectly, but using it to trade Bitcoin, and that's when Bitcoin was very poorly correlated.
Oh, fucking cursed.
That was fun.
Yeah, that was like 100% strike rate on the S&P on every move during and after the Corona crash.
Yeah.
And then I traded Bitcoin.
You weren't even looking at the BTC chart. You were like, S&P as support. I've bought some coins, and I'm like, curious.
and then I made much less than I could. I mean, I still made money doing it. Like, it's not like I lost money. It's just I could have made so much more on the S&P. Like, if I traded S&P options at that time, ooh.
Oh, that would have been spicy.
Yeah.
Still a fun period to look back on, and we'll see how this resolves. But yeah, good. I mean, technically very interesting as far as BTC goes, and it's nice that we didn't just go sideways, for example, because that would have been boring, So we've got some volatility on our hands. Obviously, I didn't disagree with anything we've discussed. I essentially said as much on the short video I posted on Twitter with, if you've had a failed breakdown, that's a bet worth taking. At least you have a clear invalidation for it. I think that's generally an understated point. Like, oh, why would you wait for the reclaim? Just buy the bottom. It's like, I understand that. But if you're not doing that, at least waiting for the reclaim gives you A, higher probability of a setup, and B, even if you disagree with the probability point, you have a much clearer invalidation than you typically would knife catching. Unless you're doing really low time frame stuff like looking at the speed of the tape and liquidations and that kind of stuff. So
Yeah,
ETH
speed of the tape. I like it.
speed of the tape, yeah, speed of the tape. ETH is not keeping up, Don. Your favorite. Remember when you were bullish yesterday? I'm joking, obviously, but yeah, ETH BTC down about 2%.
Yeah,
Seems BTC is benefiting from the strength, which
exactly.
I think people weren't particularly prepared for, because technically, as we discussed yesterday, BTC was the chart that broke down, and ETH was kind of holding on to its daily cluster, and alts were holding on in some instances to their levels. And so I saw a lot of charts floating around Twitter saying that, oh well, BTC is like so weak because you know the relative strength argument essentially. It seems like that might be in peril. Based on this move so far, at least.
It depends on what you're trading.
Depends on yeah, doesn't
because
always.
If you're trading like the fucking meme coins again, you're making money on this.
Oh, for sure.
Whiff's up a bunch, Pepe's up a bunch. I don't know how Bonk is doing, but
Bonk's up 7% as well.
Well, there you go. All of these meme coins.
Do you think we get so? Let us know in the comments if we get any clout tokens for talking about them yesterday. I'm pretty sure Don told you to buy a resistance as clear, explicit financial advice.
I actually made the argument for the Pepe resistance buy, and
Bonk as well. So
yeah,
there you go. Thanks for playing. Clout tokens move to break even. I think that's the trade management update.
that is exactly it.
That's exactly it.
Wrong.
It can't be wrong. ETH held on to its cluster low as well, which is quite nice and is bouncing at the moment. Although from a TA perspective, on the daily time frame, I'd much rather take BTC signals than ETH signals, because BTC is A, stronger today, and B, has the structure to clearly tell you whether the breakdown is a bearish, the breakdown resolves in a bearish retest or a reclaim. Whereas I think ETH daily structure is just a bit depressing to look at in comparison, or at the very least, it's not as clean. So you have less clean structure plus ETH BTC being weaker. I'd rather focus on BTC for the whole decision point technical resolution. Do you agree with that?
Yeah, I do.
Well, there you go. Sometimes Don agrees with me. There you go, haters in the comments. Do you want to follow up on any of these altcoins? No, we did a show yesterday, but I guess the same stuff is up, and it's pretty decent across the board. Some of them are lagging behind BTC. I mean, this is a pretty strong move. But the memes are still outperforming, so that hasn't changed.
Yeah, it's still playing out pretty much exactly like we said. Like, ETH's not going to do so well if Bitcoin goes up. It needs Bitcoin weakness, which fucking sucks. For ETH holders, I generally think that's gonna turn around soon-ish, but when, I don't know. And then with the meme coins, they've just been outperforming, as we kind of talked about. Like, generally, like, if Bitcoin goes up, that's a leverage bet on Bitcoin-ish, and that turned out to be quite accurate. So I don't think there's much more to say about them, honestly. Like Pepe, you can make an argument that they made it a higher high now. Like, if you look at Pepe, for example, on the daily time frame, but they haven't closed yet, so we would have to wait one more day. Like Pepe on the daily time frame, the 9th of April is a high, and then there's 26th of April, and now currently we're pushing above that. It's an old resistance. That's why I said yesterday, like, I don't actually even hate the buy into resistance play, and that's up a bunch today. Low time frame anyway. Like, this could reverse anytime, but was a low time frame call. But yeah, I generally think like that daily needs to close. If it closes like this, it looks like a new high, and generally the chart looks quite strong.
It's pretty close to all-time highs as well, right? That's actually relevant.
And then you have a very clear invalidation still, right? Like, if you were looking to buy into that resistance yesterday, the invalidation was like, what was it? Like 10% away. The target is new all-time high, which is like 40% away. That's not a bad trade, right? It still isn't. And then you can move the invalidation up higher as you go along. So still not hating on this. I think it's a decent play. Still, nothing's changed really. And I think with the other meme coins, it's pretty much the same thing. I like Pepe the best out of those, but they're all trading the same.
Yeah, I think that's fair. Solana still strong from the lows.
Yeah, in comparison to the old coins.
In comparison to other alts, especially.
Yeah.
Yeah, Whiff 7% today. I still think the daily inflection point is really good. I as we discussed yesterday, the whole 320-ish or wherever that level comes out to.
Yeah.
Sorry, where is it? It is like 320. And this is the
It
cluster
is.
top at 320. I still think that's very good. Not quite as strong as Pepe, but it's basically all. I'm not going to rehash yesterday's show. You can go watch that.
Yeah.
We talked about this in detail. I mean, more broadly, it wouldn't be a technical roundup episode if you didn't fire up the video and have FUD at support and bullishness at resistance. Like, if that's not your expectation of the show at this point, I honestly don't know what to tell you. I mean, welcome, I guess.
Yeah, I mean, it continues to be right, though.
It's working. That is the market we trade in. And I also think historically we have a healthy dose of skepticism about like multi-touch support breakdowns being bearishly retested. It's a pretty bad pattern. We even had one somewhat recently, for goodness sake, at 40k, right? We had like around the ETF range. We had like a 1, 2, 3, 4, like 5+ touches on that. We broke down, didn't go anywhere, and then that ended up reclaiming, consolidating again, and shooting off. I remember that was one you were tweeting as well around the range high reclaim at 44k.
I was actually tweeting about it at 40, 43.
Yeah, before it broke out.
Yeah, basically before it started going vertical, I was like, this range, because I had a mini range in that larger range that was like the top of that range was 43.2. That kind of like top of that inverse head and shoulders, whatever you want to call it. And I was like, this is shit resistance, like this is just gonna go up, and then it did. And yeah, I mean, it pretty much very, very similar if we reclaim the range low. As they can obviously still be a bearish retest, right? But yeah, we'll have to wait and see for that.
And also, classic example, I'm just on the daily chart, way zoomed out. There's the 40-ish K broken support, didn't turn to resistance. And this is obviously sort of imperfect cherry picking type of stuff. But there's the bearish retest of 30k on the way up that didn't really lead to anything either. Another one that comes to mind, I remember talking about this like at length, was the 18k bearish retest, that floor. Once we came back up to resistance, I think we were shilling the long setup we were shilling was all the way at 17 something k. You remember? The argument was we had a fake out, now we're back above, and etc. etc. I was probably slightly bear targeted at 18 if I don't remember clearly, but if I know myself, I was like, it's still a big level. But and obviously, if you want to go all the way back, fucking 6k, being the classic example of these multi-touch large supports when they break down and get retested. At least in crypto, at least for this instrument, they don't make for the best resistance levels. So now that I've said all of that, 60k is going to be the most fucking adamantium resistance level you've ever seen in your life, and it's going to go straight to 30k, and this show is going to go unlisted. But just some context there. And ultimately, this portion is kind of pontification anyway, because realistically, the trade trigger, if you want to treat it that, or it becomes sort of systematically valid once the breakdown fails, not beforehand. So these are all just kind of context clues or whatever else. It is quite a cavalier trade to say that these failed breakdowns never stick, so I'm going to buy the breakdown itself. That can be a very good trade, but I think it's a different trade from like buying the reclaim of a failed breakdown and buying a breakdown assuming it's going to fail. I think those are two different trades, right?
Yeah,
there we go. That's fairly comprehensive on BTC, ETH, even touched on altcoins. Any market thematic stuff you want to mention? Anything more broadly before we jump into some news? I know Friendtech is hot, and that's our first news article. But I'm wondering if there are any straggling philosophical comments, wannabe wisdom left in your mind.
I think we've heard way too much of that.
Fucking yeah, isn't that always the case? Let's jump into some casual Friday headlines, and boy, do we have some headlines. The first one: Friendtech token price declines post-launch amid claim issues. Don, you're the Friendtech expert here.
Bro,
you've got
this is so fucking
10
funny.
zillion points. You're a massive influencer, huge supporter, seed investor.
Fuck off. None of that is true.
None of that is true. Give us the lay of the land.
I do have a bunch of points, but that is basically the extent of it. So
what happened?
So generally, the airdrop happened. So first of all, like the Friendtech team said they would airdrop on a date, then they delayed it by a couple of days, given a bullshit excuse. And then on that day, they didn't really launch it. They took like very, very long. And I don't even know if it was still that day anywhere. in the world. Like I think they were just 1 day late, basically, again, and they airdropped. Like you could technically claim your airdrop on Friendtech, but what they did was they basically, I mean, their infrastructure sucks so bad that the entire thing just doesn't really work, right? So there was, or there is, a way to claim your airdrop, but you have to be a little bit savvy, like tech savvy. I didn't go through the trouble. I was like, fuck it. But basically, what that led to is a bunch of people not being able to claim their airdrop, so they couldn't trade their tokens, and the price of Friendtech tokens, whatever, went to like $20, and then crashed. Obviously, at $20, absolutely ridiculous. And then you have a bunch of people that wanted to sell $20, right? That couldn't. That see the price go lower and lower and lower and lower, and nothing on that app works. And that's just like, fuck, how do I sell, right? How do I make like at least keep a little bit of the money that I would have made if I got to sell at $20? Because that's just kind of how it works, right? Like when you see money that you think you have run away through your hands, like just like disappear, it's much worse than if it just launched at $1, right? And everyone could have sold or whatever. Doesn't really matter to people then. But the way they did it, basically, with that bottleneck of no one can claim, or like only a few can claim, basically led to everyone trying to find a workaround, and then once they did, just dumping everything, right? And we've seen a bunch of bigger names sell their coins, or like their airdrop. Like CL sold a bunch, Hisaka sold a lot, and they got to sell pretty low. Like they got to sell at like 0 point something, at least for parts of it, because of these airdrop claim issues, whatever. And now there's like a bunch of drama. People are like upset because they saw the price at 20, and they're like, I'm owed this much. Yeah, complete and utter shit fest. It's because they, like the Friendtech team, basically just were stingy. It's from, like, that's what I'm gathering. Like they didn't spend enough money on that whole launch sequence. Just cheaped out. Allegedly, I don't know why exactly they failed, but that's kind of what I've been getting from techie friends of mine, where they're saying like this is just complete and utter dog shit setup. And yeah, it's quite funny to watch. I mean, I got like, I think it's like 40,000 points, which at $20 was 800,000, which would have been quite funny. But and then it went all the way below $1, so that's like 40K. It's quite a difference, and I think that's why people are just basically super upset, because they're like, I'm owed what I could have had if I sold the 20. Realistically, no one would have gotten to, if everything worked in the first place. But yeah, it's big drama, big fun. Like I'm just looking at it, chuckling because I find it funny. I'm just trying to have a little bit fun with it. And then yeah, I don't know where that's gonna go. I think the whole team behind Friendtech just massively fucked this one up, and it kind of casts a shadow of doubt for the people that haven't had it before, which I think, I mean, everyone did, because they've been tweeting dumb shit and they've been saying dumb shit for the longest time. But yeah, that's the whole Friendtech story. Basically, launched at a high price, no one could sell, and then people freaked the fuck out because they wanted to sell at those prices, couldn't, and then they dumped at quite low prices, and everyone is kind of like freaking out now, which is great.
What are you going to do from a trade perspective as a big points holder, so on and so forth? Are you going to buy some tokens? Are you going to... What's the trade here?
So I wanted to basically, so on Friendtech you can farm, right? You can provide liquidity and all that kind of shit. And I wanted to do that, but I didn't have any, like, or not enough on-chain ETH just lying around to do all of that. I was like, and I'm too lazy to move much more money. So I moved a little bit. I wanted to farm with it, but I couldn't because the whole app doesn't really work. So I just bought a little bit more, like at low $1 prices. But yeah, it's a little bit of a frustrating process because I think like if I could have claimed and if I could have like basically provided liquidity from the get-go, that would have been quite fun. Just in general, like trying something new, playing around with it, whatever, but nothing on this shit thing works. So I'm just gonna leave it. Like I was thinking about like, and I did move a little bit of money around to just like basically be able to put my whole thing in the farm, like my whole friend tech points. But I'm too lazy, and this shit doesn't really work anyway. So I'm not gonna do anything. I'm gonna sell it if it goes above $7. Right now it's trading at 1.3. I'm gonna sell it if I think it's gonna go lower, obviously. But right now I don't have really any inclination to do anything. Like I'm at $1 prices. Like if I give like if it's a zero, if at the end of the day, like if it all goes to zero, I don't really care too much. Like it's not like it's a lot of money. It would have been fun if this shit worked. Like that's kind of my main gripe with all of it, is that like this could have been a fun launch and could have been quite cool. And I'm a little bit disappointed that it's not, but it is what it is. So at the end of the day, what I'm gonna do is probably nothing. If it goes higher, I think just because I think the friend tech team is a little bit incompetent, I'm gonna sell. If it goes to zero, I mean, at some point down the line, like if it starts breaking down 0.5, 0.4, at some point I'd just be like, okay, maybe I'll just write it off. Yeah, we'll see. I don't really have any plans. Don't really care about it too much either.
There you go. It's been fun to watch though, and I think it's just a big squandered opportunity. You know, so
Oh
well
yeah,
positioned for social fi and so much attention, so much native shilling, so many big accounts participating, so on and so forth. And this is pretty, at least in its current form, quite a disappointing outcome. Do you think?
no, like that's the biggest dumb result out of it, right? Like they were perfectly positioned to make a lot of money on like for themselves, but also just in general make something quite cool. And what they did is they created some unusable piece of shit that no one really wants to use. And I'm not surprised that it's doing so poorly. It's not bad. Like, don't get me wrong. Like, this is for me right now, and I really didn't put much money into like farming the whole thing. Like for me, this is like a $50,000-$60,000 airdrop right now for basically doing nothing, which like you'd be an idiot to complain about, right? But they were perfectly positioned to basically spearhead that whole sector, that social fi sector. There's really nothing else that you can invest in that sector. So like I think it's a massive lost opportunity, and it could have been quite cool. I think something like this I would actually enjoy using down the line. It's just like friend tech probably isn't it. And I know a bunch of people will show me the AVEX alternative, like Star Arena or whatever the fuck
How about
that's called.
Farcaster?
Oh, I actually haven't used it.
Oh,
I just straight up haven't used it, but that might actually be like a lot of people are using it and seems decent enough.
Don,
But
I just keep giving you gold on these shows. Like, look at Wormhole today. It's up like 2.5%. That's huge.
wow, wow. I was like,
It's like the weakest altcoin in the entire market, but it's up, and I shield you that. And you use 1000x leverage,
I
so
do,
that
I
would have been a
do.
mega position. And then Farcaster as well. I don't know, man. I think people sleep on me on this show. It's always like, oh, it's what's Don gonna say? Cred's the interviewer, but I'm obviously the puppet master, Geppetto, pulling the fucking puppet, pulling the strings behind the scenes, as you can
I
tell.
mean, of course, everyone knows that.
I
Um,
fucking wish, dude. I agree. We'll see where Social Fi goes, if anywhere. I'll be
it's
interested.
such a shame, though.
It's a
It's
shame. Maybe they
such
can
a
rescue
shame.
it. You know, I don't mind a good comeback story, but that's not what precedent and history suggests.
Yeah.
You know, they had a lot of downtime basically to prep for this launch,
Imagine having 8 months to prepare a launch, and
and in
then
these conditions as well. And yeah, it's
yeah.
pretty unfortunate.
I mean, if they launched a month ago and did a decent launch, the token would have launched at 10x the price, I think.
I think that's right.
Which is just like how can you fuck it up so badly? And this is not even for my own sake, right? Like obviously I would have been happier if I got more money, right? But just looking at it, like a really good idea, and kind of seeing it squandered like this, and just generally like perfectly positioned. Like sometimes someone or something or an idea goes viral, right? And then you're like, okay, this is so easy to take advantage of this, right? Like if you're that person or whatever, you can basically change your life, right? It happens all the time, not only in crypto but everywhere, right? Like this is how today's day and age goes, right? Like some random dude just like posts something on Reddit or like about his business or whatever, really. It goes viral for whatever reason, and then their life is forever changed, right? And in this case, basically they went viral in crypto and they made a shitload of money, and they had a lot of interest still, even though they fucked it up the first time, right? Because let's not forget, like they in my opinion fucked up 8 months ago already, right? Like they were perfectly positioned to just kind of snowball all of this attention and kind of like transform like friend tech into something that would have or could have gotten quite big. But instead they just kind of held off, and I was like, okay, maybe they're just gonna sit there and build something worth the wait, right? But at the end of the day, it doesn't really look like it. So it's a little bit sad on that front. Not, like I said, not only because I'm getting less money out of it at the end of the day, but also because I think they just threw away something that could have been really nice. And I'm not saying it has to go down or whatever. Like obviously, like it's crypto, shit can go up. And like I said, I have my stuff still. But I'm saying it could have gone so much better, and that's a little bit disappointing.
Yeah, agreed. Although from an incentives point of view, you can in a twisted way start to understand it. Like you make so much money off this type of stuff, especially with the fees and the bonding curves and so on, how they were.
Oh yeah.
That especially with such a small team, and yeah, it's tricky. I'm not accusing them or anyone else of this per se, but just the way the industry is structured in general. Slow rugs are really attractive.
Oh yeah,
Some
because
faster than others. Like not the straight up blatant theft, compromise contract, can't sell, pull liquidity type of thing, but more the sophisticated slow rug, where you raise a bunch of money, you ship something to like keep the lights on, but you like make a huge bulk amount up front, and your motivation, understandably, once your life's been changed by several orders of magnitude, kind of dwindles, to be generous.
oh yeah,
And we've seen a lot of that, and yeah, that's that's kind of how the fundraising incentives are set up in crypto as well.
it's kind of sad. Like imagine if some of these people just worked on whatever the fuck they were actually like doing.
Don't be
Because
ridiculous.
this thing can get so much bigger. I think that's basically like Binance, for example, right? Like Binance started off as this like exchange that just listed a bunch of very weird, very like small altcoins, right? And that's why they got their users, and they were just kind of like, fuck it, we're kind of skirting the law a little bit. At least that's what it looked like. And then they could have just ran away with it, right? They could have just been like, okay, cool, we've made enough money, like this went viral enough. We're all rich now. Like CC made a shitload of money like during that 2017-18 run, right? They could have disappeared and been like, okay, whatever, it's been enough. But instead, they kind of like kept going. And I mean, obviously, you do. Like that's the thing. Like when you just look at it from like a logic standpoint, like why would you not keep it running unless? And I think that's basically like why people are not doing it is unless they're just like, fuck it, we've made enough money, which fair enough, right? Like you make a couple millions from like a little bit of effort, and you're like, fuck it, I've had enough. But with a lot of these things, I just wish people would just be like a little bit more like Binance in that sense, where they just stick around even though they made a killing. And now Binance is fucking huge, and it's incomparable what it was back then to what it is now. And I think a lot of spaces in this, like a lot of companies, whatever in this space could use a little bit of that, where they're not just short term being like, okay, made a bunch of money, let's coast, let's but just reinvesting and just growing aggressively when they have the spotlight, that just kind of makes sense. But for some reason, people just take the money and run. And I'm not saying fintech people did that. I have no idea what they did with the money. Maybe they reinvested it all. It doesn't really look like it to me, but yeah, it's just something that I'm missing in crypto a little bit. Like, people are making their money on the tech side of things, right? Like, they make a new project and then disappear, instead of, like, if you want to do that, just trade, right? Like, that's the job of a trader. Like, make your money disappear. Like, that's why I'm trading. But
Yeah, that's why we're here 7 years later, Don. What does that say about us, eh?
yeah, I mean, technically, we could have just launched the coin and ran away with the money like 10 years ago.
Stay tuned. The next article, maybe some good news. Dutch authorities arrest ZK casino team member amid rug pull allegations.
Oh, not good news for him.
Not good news for him. Although I think if it is derivatives monkey, he did have a tweet saying I want to go to jail, like, just for like the character arc or some, some absurd statement like that. So there's some manifestation going on at the very least. The positive thing about this, I mean, it'd be nice if people get their fucking money back. That's first and foremost, right? Yeah. But also, I was quite positively surprised by how quick law enforcement acted on this. Like, this is a massively sort of speedy turnaround, between like when the rug pull takes place and the straight up arrest. One of the reasons I think people are so cavalier with their pump and dumping, shilling, gray area, to be generous, legal activities is because if you consider the SEC, or at least the US side of things, a lot of this shit takes absolutely fucking ages to go anywhere. Even the police type investigations, they usually take a while, months, years, and most of them obviously go uninvestigated unless you really put a bounty on yourself. But in this case, I mean, it's a big amount, but just the sheer speed with which the arrest kind of took place is, I mean, maybe it'll make some people think twice, at least in certain jurisdictions or with the more explicit rug pulls. And that would be a positive thing, I suppose.
Yeah,
as long as people get their money back, obviously. So you won't be gambling on the ZK casino, presumably, Don.
No, I don't know why anyone did, to be quite honest. Like, and this is something that people just constantly do wrong. Like, if you follow someone, right, and they just tweet completely unhinged shit, like, why do you guys actually do whatever the fuck they say, right? Like, you see, like, derivatives monkey, right? Like, he was tweeting dumb shit all the time, right? And like, just bad stuff where, like, this guy is just completely unhinged. And then people go and they're like, oh, but I want to have my money on that guy's exchange, right? Like, what the fuck are you thinking? Like, I just don't understand it. Like, when you have people that actually show you who they are, but in a bad way, right? Like, that they're just actually just a bad person, that publicly, like, I mean, just fucking believe them, please. Like, what the fuck? Like, I don't get it. Like, I seriously don't get it. I saw those tweets and I was like, I don't want anything to do with him. I don't think I ever followed the guy. But I know about him just because his tweets were just like so fucking annoying. So just stop. Please.
I think people happily look past this type of stuff if they think they can make money. So it's not like they're completely blind to it much of the time. I think it's almost willful ignorance where, yeah, okay, there's some red flags here, but as long as I can make money via this person's audience capture before the red flags manifest and they fuck off with everyone else's money, there's a trade here, essentially. I'm sure some of it is just like blind idiots just buying into it and not seeing the red flags. But I think in general, with a lot of these like pre-sales and whatever else, just like the KOL shit, people kind of know in the back of their minds this doesn't end well and it's unlikely to go anywhere. But also at the same time convince themselves that there's enough of a window there where there are A, dumb people participating, and B, they are not the dumb people, obviously, and are smart enough to get out in time. I think there's a lot of that going on as well in the market.
Yeah, but then, I mean, there's plenty of people that are actually decent, right? That you can do the same thing with. I generally think, and this comes back to like trading as well. Like, if you think Bitcoin goes to zero, like, why the fuck would you be trading it, right? Like, if you go to, like, if you think it's gonna go up generally, like, the end result is up. So it's much easier to take longs or like trade generally, like, bullishly. So if you kind of look at this and you're like, this guy is going to zero eventually, right? And you could tell, like, these unhinged people, they just lose it eventually. like the end result is predetermined, right? Like, yeah, if anything, you would want to short anything that he does because you know it's gonna go to zero down the line. Like that's the end result. So I think it's just a little bit of a dumb way to think about it. Like just look at it, like what's gonna happen with this, and at the end of the day, it's going to zero. So that's the only thing that is guaranteed. And then everything along the way, like yeah, maybe you get a little bit of an uptick or like a downtick. But at the end of the day, like it's going to go to zero, and then you don't want to be long on something like that because it's just basically the time is ticking, and every second that you hold it, you're more likely to get completely wiped. So I think it's just like you shouldn't be holding stuff where you think, yeah, this is gonna end up very poorly.
Okay, you
and
should
not
never
for long
trade
anyway.
altcoins then, Don.
Oh, for like, and this is why I'm like, you should only hold these for very, very short amounts
Sure,
of
sure,
time.
sure.
Like only when you think that they're actually gonna put it in impulse is it worth holding altcoins, because otherwise you're probably gonna hold them to zero. Yeah.
But on the bright side, you might get a nice role in Discord or a badge on Telegram. So you haven't considered that upside, have you?
I mean, that's actually true. what kind of badge or role are we talking about here?
Something embarrassing, as it always is. You know, you
Oh.
go from your stop gets hit. You put a mental stop, and then it gets hit, and then it's down so much you just feel sick and you give up on the position. That's when you go from trader to investor. I think many such cases.
Many such cases.
Coinbase's Q1 earnings jumped to 1.6 billion as transaction revenue soars. So as always, Coinbase beat, not as always, but like as is often the case, Coinbase beat expectations. What I found interesting in this chart was it gave some insight into where we are in terms of retail participation, or at least US retail participation, relative to 2021, and it's pretty low as we expected. I still think a lot of the altcoin trading and the flows and whatever else are kind of nimble crypto native funds and past cycle enthusiasts PvPing each other. And the actual retail inflow that we saw in 2021, like through NFTs and all this celebrity shit, and the average Coinbase app being number one, as faulty as an indicator as that is, all of like that real kind of mass herd retail inflow just hasn't been the case in this cycle. Now, do you think that's bullish or bearish? Because the bearish case is like they're not coming because the economy sucks and everyone's poor and everyone's focused on other things and sports betting and so on and so forth. And they're not coming to buy our dogshit alts. So instead, you'll have to be more careful with your portfolio construction, and it's more of a stock pickers market, dispersion in returns, and so on and so forth. Whereas the bullish case is some version of we are so early because we're at all-time high and all this stuff's going on and retail isn't even here yet. Where do you fall between those two extremes?
I mean, more to the bearish side of things.
Shocking.
Because I think, no, I just think like people have heard about this rally, right? Like it's not like they haven't, but they clearly have no interest. And I think that's bearish, just generally. They're more than happy to throw the money away, gambling, sports, or betting on options rather than going to crypto. And I cannot really fault them for it, given how last cycle turned out. But yeah, I don't think that's necessarily bullish. I don't subscribe to the fact that that's bearish, like, and we have to go down either, though. Like, if the market goes up high enough, I think a bunch of people will be enticed to buy at least Bitcoin. With the altcoins, maybe not. But yeah, I think it's not as bearish as people say, but it's clearly not as bullish. Like, if anything, it's more on the bearish side of things, like the bull case. Or we're so early and they haven't bought in yet because they don't know. Like everyone knows about crypto now. Like, don't kid yourself. And I don't necessarily think like at some point, like obviously if Bitcoin goes to 200K at some point, you're going to get a bunch of retail flows again. But yeah, I don't know. I'm not really on any far end of the spectrum here, like bullish, bearish. I think it's not great because people are clearly sick and tired of crypto. But it's also not that like terrible because clearly we didn't really need it.
I was going to say, we don't need you.
Yeah.
Makes sense. Last one I've got is spot Bitcoin ETF. Oh, go on.
Just to that point,
Yeah,
like
please.
they just buy the biggest dog shit anyway, right? Like they buy the dumbest
That's
shit,
true.
and it's not like it's going to anything in the ecosystem anyway. So yeah.
Well, yeah, every cycle we create a new outlet for retail that isn't our liquid high cap altcoins.
Yeah,
it's
yeah.
either NFTs or it's meme coins or something else. And thing is, that might sound okay, But at least if you're shilling people into, like in previous cycles, into high cap altcoins, like, yeah, they'll blow up and eat shit or whatever, but at least they stick around for long enough to like learn about crypto and see some upside and experience the cycle and join a fucking community for better or for worse. And I think that increases the odds that they come back just simply by having more time in the market. Whereas with a lot of the NFT stuff and certainly the meme coin stuff, they show up and they get rolled like fucking immediately. Like they lose all their money in a very short period of time. And they're like, okay, yeah, fuck this. There's nothing here. They don't even get a chance to kind of get better at trading and learn some shit and create a network and so on and so forth. They just come in, lose their money and think, yeah, I knew this was a mistake and fuck off. I think it's almost good if you're targeting like a retail type of thing to either have like cool dApps that they use or games or social apps or whatever else, or if it's going to be on the speculation side, to at least like not shield them into complete fucking rugs. They're going to take their money in a week. I honestly think, as cynical as it sounds, there's a big difference between losing your money in like 1 to 6 weeks versus 3 to 6 months. It's like, even if the outcome is the same, if the process feels more fair, like, oh, I should have sold, and oh, there's like this whole trading thing, entries, exits, all that type of shit, the odds that these people stick around, come back, and, you know, aren't completely apathetic or even sort of negative towards the market, those odds are higher. Versus if you come in and get fucked, who can blame those people for kind of ignoring crypto from that point onwards?
Yeah, 100% agree.
There you go. So buy our coins is what we're saying.
Yes,
our
please.
Especially Don's coins. Yeah, buy Litecoin. Yes. Jesus.
Oh no. Don't do it. It's gonna end the cycle.
Retail buys altcoins, Litecoin specifically. Yeah. Spot Bitcoin ETFs record largest daily net outflows ever. Yet the market is up, Don. I was memeing this before the show started, saying peak inflows top, peak outflows bottom, as a nice symmetry meme. What do you think of the ETF? I mean, we've sort of gone back and forth on the ETF topic, and we said that they'll really get tested when shit really hits the fan. There's a bit of paper-handedness going on, I think, with the available evidence. We haven't had like a massive crash or anything too scary on the BTC side. I mean, didn't break 60K for fuck's sake, you know? And that's not like a big move by crypto standards, even by historical sort of corrections or anything. And it seems like the ETF holders are easily spooked to some extent, at least. Now, you could obviously make the argument that, oh, it's not, you know, it's not the dip that caused the ETF selling, it's the ETF selling that caused the dip, and then you front run those changes and flows, so on and so forth, that whole fucking complicated discussion that no one wants to get into. But I personally don't mind this too much. I don't think it's a huge deal. It seems like the market can trade on its own, even on streaks of outflows and largest outflows and so on and so forth. It's not entirely clear to me whether this is going to become like a useful indicator or anything of that type of nature. But now that we've got more data and ETF data amidst volatility, are you gleaning any insights from this?
I mean, I think it's nice that we didn't dump, basically, because it's a FUD event, if anything, right? Like you get a bunch of outflows, people are like, oh, it's over now, and price has gone up. And I think that's basically like what we can take it as. Like, we don't really have to think about it too much. We had outflows, the market trades on its own. It's doing okay. That's not that bad. Like, because I was ready to see outflows, and then basically our native industry starting to freak out, being like, oh shit, what if they all start selling? And so far, nothing of that has happened. If anything, I mean, today's been good, yesterday's been good, and the outflows been not, like, there's been outflows, not inflows. So yeah, I think it's generally a good thing to have price up when we have outflows. Like, that's just like a bullish divergence, if anything.
Oh yeah, that's a good way of framing it. I was going to say it'd be quite nice if we could hold a floor and not completely collapse once ETFs, at least the rate of inflows slow down, or even if the rate of outflows become consistent for some amount of days or weeks. Because otherwise we're then faced with the conclusion that it's a fucking ETF bull market, right? Live by the ETF, die by the ETF, and it's all just kind of front-running flows both ways. It'd be nice if we could have some, I guess, non-ETF price action that wasn't just the, not dog chasing its own tail, but some version of that, you know? But remains to be seen. That's all I've got for news, Don. We're at 61.4K. Is this the biggest bearish retest ever? Your views must have changed in the last like 30 minutes. Look at that 1 minute wick. I personally find it terrifying.
No, I looked at the 1 minute time frame, and there's a clear downtrend on that.
That's a 1 minute failed breakout into daily resistance.
Yeah, it's terrible actually. So
kind of fucking awful. It's over.
It was a good bull market while it lasted.
The first half of this show was a bull market.
Yep, and now it's all over. You heard it here first.
It's
all over.
Exactly. I mean, you have to be a fucking idiot to buy resistance, right? As we discussed very clearly.
Of course.
I mean, it's a bearish retest. So. These work all the time.
And that's why it's called a bearish retest. Just listen to it.
It's in the fucking name. What more could you ask for? Our shitty jokes aside, that's all we have time for this week. Hope you enjoyed Altcoin Thursday as well as Casual Friday. Leave a like on this video before you click off. Costs you nothing and it helps the channel out. Leave us a comment if you enjoyed this episode as well. Thank you to Woo for supporting the show as always. Hope you all have a wonderful weekend and we'll see you next week.
Bye.